What up, traders? What up, investors? Ken here from Dyslexic Investor, and we're going to be looking at the Russell 2000. This one, ETF's not talked about very much again. The Russell 2000 is basically to the 2000 smaller cap to mid cap companies that are really more well represented, more better representing of the overall U.S. economy rather than like the S&P 500 or NASDAQ. Because again, there's going to be very tech heavy stocks, and there's a lot of those companies are global reaching. These are going to be smaller, like it's not going to be your mom and pop's pizza shop down the street, but these are going to be the smaller companies that are manufacturers. It's going to be going into more regional banks and other kind of various subsections within that. Again, not small companies, but they're still large compared to or small micro companies compared to what we're looking at, like an Apple and things like that. So looking at, again, we're looking like at the IWM, so that's the ETF that tracks the Russell 2000. So we're seeing some very strong options activity coming in today of nearly some contracts of around $3 million bet. That was basically calling a straddle or strangle, sorry. And basically the play is where you're buying a call and a put, the same strike price, and you're looking for a pretty large move in either direction. So what we're seeing here, it kind of looks like a lot of information here. Let me go back here. Let this load. So we're looking at the November 20th and the 170 call, and then also the November 20th, the 160 put. So both of those, again, were purchased for a debit, meaning they bottom with the green icon again. They paid it. That being said, what is that potentially looking for? Basically, the trader, the investor, whoever's buying this, or the hedge fund is just saying, hey, we don't know the direction. We don't know where the market can go. We're just gonna kind of just sit back and just chill and ride this out. If it goes up, it goes up. If it goes down, it goes down. We're still kind of just sitting back here, just kind of just taking it easy. And just while other people are freaking out and having to buckle up and put their helmets on for the potential swings and sways, the individual's just taking a step back and kind of looking out like, let me look at what's going on here, and just really kind of play that out here. So with the overall long, so the straddle is something where they buy at the same strike price. So we're going to be looking at the strangle. So let me move this over here. So let me go ahead and get this up and running here. We're going to be looking at the overall account. Again, we're going to be looking at Tastyworks. So Tastyworks is the account that I use for platform to trade options, stock, and everything. Definitely fantastic product. Check it down below. Affiliate link down there if you're interested on opening up an account. I think they're currently running a special. You get 10 contracts or 100 shares on them if you open an account of not 10,000 of $2,000 or more. So substantially better than the other folks. That being said, looking here again with the spread that we're looking at, looking at that $160 put strike price and that 170 call strike price for that November 20th. You see that they had 4,000 of each. So let me update that down here. Then you'll see the numbers populate through the bottom here. Again, just a hair over $3 million currently. Of course, your max loss is going to be what you're putting into the trade because it is a debit. The max profit is infinite because, again, these can go to the moon, these calls. The theta decay is pretty aggressive, again, because you're buying short-dated options, not extremely short-dated, but you're buying an out-of-the-money. Both of these are out of the money currently, so that theta decay will kick in a very high delta, and, of course, the probability of profit is like around 50%. Looking here on the curve, in the Analyze tab within, again, Tastyworks is fantastic if you're more of a visual learner, which I am, and this definitely kind of just prints out what is potentially what you're buying. So basically, the red means you don't make money, the green means you do. So this trader, this hedge fund is really looking for an exponential move to the upside or to the downside. So if the stocks of the Russell 2000 does absolutely nothing, they lose money. Most in cases that's, I'm not gonna say it's not gonna happen, but being the overall market and people's emotions, especially around election times, this could fluctuate in a given day or even a couple hours to the extreme up or downside. So this being said, this again is really kind of just placing their bets and just kind of sitting back like we saw with Chewbacca and just kind of putting your arms up and just saying, Jesus, take the wheel here. Really looking for that particular movement. So they don't make any money to the downside until around like that 100, if the IWM crashes below 152-ish, and then the Russell has to break above 170, 177.5. So we can go ahead and look via the Thinkorswim. So 152 kind of comes down to around that 200-day EMA where we're currently looking at the 150 range, and then the 175 is basically a key level which was our basically similar to our previous high above that 170 level which we saw pre of the overall pandemic and so forth. Again, we're talking about the Russell 2000. This thing has not made an all-time high like we saw with the SPY. Of course, that guy has already made an all-time high, as you see, because it recovered fairly strong out of the gates, and now kind of coming back to where it was right before the pandemic. And then, of course, QQQ was kind of a rocket ship from the bottom and just really ratcheted up quite a bit again. Their overall price was around $232. 237. Now we're a little over around 285. We hit 300 and now kind of bouncing around here as well. So IWM is very much underperforming the overall market, aka these smaller businesses were hit substantially more than your Zooms, your Facebooks, your Microsofts, your Apple, and things like that. Again, a lot of these businesses are still limited or even shut down. So this potentially, depending on which way you're going to be playing it, if the virus, vaccine, whatever comes out, this definitely can get a huge uproar to the upside and even to the downside. The election, no stimulus bill whatsoever, it can really go the opposite direction. You're really you're paying a pretty high premium to potentially see on which way the market can go. And the bet is very specific on the sense of where the limits are going to be happening and where you're going to be looking to make profits and so forth. A little bit more on the risky side, very capital intense. Even just buying one of those options, I believe, was around $7, so $7.60, so around 700-ish and $50 to place this trade. Just to have those one contracts, of course, they did 4,000 of it, so it's around that 3 million limit. That being said, I don't think it's a worthy bet. Honestly, this might be a trade that I'll put on, to be frank, to kind of see playing the overall election, the market, whatsoever. And I think if we do get a strong comeback, this is definitely going to be something to really to write home about. So that being said, please don't forget to like and subscribe down below. And if you're interested in joining the Discord, that link is down below, completely free. And if you want to help support the channel, definitely check out the Patreon and the YouTube membership tab. All right, guys. Hopefully to catch you guys on the next live stream. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace!